Hey there guys, and welcome to this little post-trade debrief that I'm going to do with you. The title of this is going to be Perfect Execution, and what I want to do here is I just want to take 5-10 minutes and I want to go through, for instance, the strategy that I use, a trade setup that I use, and I want to just take you through the step for step from strategy development to then the actual execution style, and then the most important part, which is the post-trade analysis. So let's get straight into this and let's see if we can pick up on one or two things. So first and foremost, the most important thing, when starting all out is we want to have a look at obviously the strategy development. So, what we want to talk about in this sense is we want to find ourselves a strategy that works time and time again. Now, there's loads of different strategies out there. It doesn't matter what tools you're using, whether you're using market profiles, whether you're using the price ladder, moving averages, it doesn't matter. What matters is that when you find something that you feel has a recognizable pattern that works time and time again, you need to go and then develop that strategy to such a point that there's no guesswork, there's no thought process. It's merely just execution based on the information that the market is teaching you. So this strategy is very simple. Okay, the strategy I'm going to show you through the price ladder is what I call sort of a V-shaped recovery or a V reversal, and in a sense how it works very simply, the market comes into what I deem a key little level of support, an area that I've identified where buyers have been very, very aggressive after a very aggressive move up, and this is kind of that first little sort of trickle back down where I expect to see the buyers very aggressively enter the market. Now, the reason the strategy works particularly well is because for me the interpretation makes a lot of sense. Now, what do I mean by that? Well, what I mean is that when we do get that first little pullback, okay, this pullback is not being created necessarily by aggressive sellers. Okay, up here we might have had aggressive sellers, but at these lower prices what you're still getting is just that last little bit of profit taking from these buyers, as well as maybe some short-term algorithmic or day trading type strategy. So for me, what happens is when we find this first little, what I like to call S1, that for me is the single most important point to trade. Now, what I've noticed over years of developing the strategy is you tend to get a very aggressive response from the buyers, and it's that very aggressive response that I'm going to talk you through as we go through the ladder. So let's watch it through, and then we can kind of establish how we could trade this out. So as you can see, this is the WTI oil. You can see on the left side of the ladder, I've got a whole bunch of bids around the price 90, 89, and 88. I deem this to be that key area where I expect to see buyers entering. So straight away, let's watch this through. We can see the market comes down there first time, a little bit of sell side action, and straight away we see a buyer reloading this. So we can see that even before the key level, the key area where I feel a buyer needs to be aggressive, I can see that a buyer is stepping up the pace of purchasing even ahead of where I think he should. So that's a very early signal I've picked up on this trade strategy, keeping me interested in the play. So I'm just going to walk you through this. Again, comes down a second time around. We can see again a seller selling. This time the buyer does not reload. We can see a little bit of buying at the twos, so the buyer is still happy to lift that seller away from the market. But again, note we can see the seller holding on to these lower prices. So what I want you to watch is the reaction once we test this level, and then I'm going to talk it through. So the market blips down straight into the 8s and the 7s, and the market instantly goes 8, 9, 90, 1, and 2 bid, and 3 bid. So straight away we can see that not only was the buyer buying ahead of the level, but equally the buyer was buying as soon as it took lower prices. He very aggressively stepped up the purchase. So right now we can see that the buyers come into the market. We can see that seller, which was holding it previously at 92, he's still holding it, but let's see what happens once the twos get taken out. So again, note we can see 780 traded at twos, so we can see there is a buyer buying the twos, but equally again 100 lots has been reloaded the twos. So the buyer lifts the twos. Let's see what happens when he trades 3. So 3 trades. We can see 3 being traded, 3 lifts, and we go to 4. And we can see now the seller selling at 3s, but the buyer holds the 3 and lifts the 4 again, and so forth and so forth. So we can see the buyer, who was originally a little more passive on the way down, has now turned to be a little more aggressive, but only once we traded that key price that I spoke to you about with regards to where I thought the buyer would step in. So note then aggression 4, 5, 6, 7, 8, and 9 all lifts at the same time. So that's the basic premise in terms of price action that I wanted to show you in terms of this video. Now, let's just quickly go through the strategy, show you the sort of the understanding behind it, and then I'm going to move on to phase 2. So remember what I said, okay? Strategy development is not just about finding a pattern. It's about finding and understanding every little element of that pattern. Okay, if someone came to me and said, you know what, how do I trade this strategy? What am I expecting to see on the price ladder as my key tool for execution? I can tell them in as little as 20 words exactly what I want to see in order to sort of successfully execute that trade strategy. So the first and most important thing is that I need to decipher: am I getting aggressive in and an aggressive out type price response? So what do I mean by that? In this example, what we could see was, as the market came down, the minute it aggressively blipped down, in other words, took a multiple of prices down to the 87s, we got a very aggressive down move, which equally and aggressively moved back out. So we get the aggressive in and aggressive out. Now, that's the first thing I need to decipher, because if I get an aggressive in, then I should get an aggressive out, which means that if I'm in this trade, I should be able to get and take my profit quite easily. If, however, I get a passive in and a passive out, for example, let's say the market came down here, took out the 90s, then took out the 89s, and took out the 88s and 7s, and sat there, and we saw a lot of two-way trade, a lot of two-way interaction between buyers and sellers. That's a very different piece of price action that the market's showing. And it's not a piece of price action that I want to see in this strategy. So that's the key, is that when you have a strategy, when you're developing it, make sure you cover all your bases, cover all your angles, know exactly what you want to see, not just in terms of, the price response, but how long should it take? What do you want to see sellers selling when, you think only buyers should be buying? What kind of volatility do you want to see? Do you want to see high volume? Do you want to see low volume? What time of day do you want to see the strategy play out? So all these elements will ultimately add to not just the profitability of your trade, but also the potential positive outcomes of your trades going forward. So that's stage 1, is development of a strategy. Now, once you understand and fully, sort of know the strategy back to front, then we move on to the second most important part, which is ultimately, the strategy execution. Now, fortunately, in this example, I've shown you the strategy, as we can see here, and then I've shown you the price ladder. So I've shown you how I would execute the strategy. Now, in terms of execution, there's a few things we talk about. First and foremost, are we entering the market passively or aggressively? What do I mean by that? In this example, you could see obviously I had limit orders in the market. So I had left a limit order at 89s and 88s, and ultimately I was looking for a fill. I was looking for the market to bring me the fill, for me to be a liquidity provider in the market. Not a liquidity provider, a liquidity taker. So I was taking liquidity from the market. Now, the important thing to understand is that some strategies you want to be passive. Some strategies you only want a certain price. Okay, in this example, as you can see, we have a minimal target. We're only looking for 10, 11 prices. So what we don't want to do, because we have a tight stop, we don't want to be paying up. We don't want to have to take a higher price than the price we want, because we're going to then obviously start skewing our risk reward. So that's the important thing to understand. Are we entering passively or are we entering aggressively? Now, an example where we would enter more aggressively is, say, if we were playing for a breakout trade. In that case, because we see momentum in the market, we'll want to be more aggressive, unafraid to hit the market, simply because we are looking to then take liquidity toward the market, towards other participants. Okay, in terms of obviously execution, we want to see speed. What sort of speed do I want to see? Okay, in this strategy, obviously I want to see speed on both sides. So I prefer to see speed into me, and then I get filled, and then I prefer to see speed on the way back out. Okay, for multiple of reasons. Obviously, I want to get paid quickly. All right, because also if I see a lot of speed into it and it starts to go a lot of speed out, I know that I can get a lot more risk in this trade, because the shorter period of time I'm sitting in this trade, obviously reduces my risk ultimately. Then in terms of target, it's an exact target, okay? And when we get to the post-trade analysis, I'll explain to you why it's so important to talk about your target and what kind of target. Now what I see with a lot of younger traders is, they tend to, have these dreams of, for instance, buying the oil at 89s and running it for a dollar, and people seem to think that's what trading's all about. It isn't, guys. The honest truth is trading is about, taking 4, 5, 6 winners a day on leveraged trades. That's where the game, or that's where edge still exists. If you want to be obviously someone who takes $1 or $2 moves in the oil, those moves come very seldom, and a lot of the time you're going to have to be very patient and have a lot of capital invested in those markets in order to see those kind of big moves. But also you're not going to be able to risk or take as much of a leverage position simply because you would need to have a relatively big bankroll. So important when it comes to targets. Note, guys, I'm not trying to be cute here. I want an exact target, and we can see the exact target before obviously the market came up was sitting at 99s, 00s and 01s. Now what we're going to do is we're going to play the trade forward, finish it off, and then play it through again, and we're going to go through this last part, which is the post-trade analysis. And this is the most crucial part of perfecting a trade. So many people stop at this point where they have the strategy, they have the execution, but they don't ever analyze themselves. Now this is why I like to watch back a lot of videos of myself, because ultimately I can watch the trades I do, I can see the mistakes I make, the errors I make, and ultimately perfect that execution. Okay, let's play this again and let's have a look how this plays out. So what we can see is the market's come back down. We've gone back bid, and what I want you to pay attention to now is we've obviously saw the market came up to these 99s the first time. It took a 1 lot out, it's left the other 9 lots. But what I want to show you now is I want to show you the execution style here. So ultimately the trade, what we're looking for is a passive entry. We're looking for an exact target. Now the market's come up to that exact target and it hasn't filled us. Okay, so straight away as a trader, you got to say to yourself, well, if at a bare minimum in this strategy you expected to get the fill there, and the fact that it isn't, but more importantly, as you're going to see now, the fact that it doesn't give it to you the second time round is very suggestive that actually maybe it's time just to cut this trade, take the winner, regardless of it being, having missed out on say 5 prices, take the winner and just sit back and wait for the next opportunity. So ultimately what you're going to see here is very poor execution, a very poor, a poorly executed trade where it's almost a case of, we've gotten stuck in this idea that, well, you know what, I wanted my fill up there, you traded the price, you just didn't fill me, and now suddenly you can see a whole bunch of attempted scaling going on. Now remember guys, as a rule of thumb, especially for young traders, keep it simple. Okay, you can see a lot of 1 lots being offered here, and it's a lot of complexity going on here. There's too much thought process going on here. All we simply wanted to do was buy the 89s, get out at the 00s, take our profits, sit back and wait for the next trade. Okay, so what you're getting to see here, which is brilliant, is some pretty poor execution, some really bad execution. At this point as a trader, bang, I should be offering the 94s, take the 5-tick winner and run. Finish, it's a 5-tick winner, it's better than nothing. Okay, it'll be a good $450, $500, not what we wanted. We wanted obviously the $1,100 win. That was the strategy. It didn't work. So what? But the last thing you want to do is start messing around. The last thing you want to start doing is losing focus on the ultimate objective, which is to make money, guys. Okay? Sometimes the market's not going to always give you what you expect. When it doesn't give you what you expect, don't make the crucial error of then giving back some to the market. Right? At this point in time, the market is still saying to me, Brannigan, you know what? You can take profit out of me. I'm giving you the opportunity to make some money out of me. So don't make that mistake. Don't feel like, just because the market hasn't given you what the trade deserved, don't make that mistake of then giving some to the market when ultimately you had the right trade. Okay, so again, note the poor execution. Suddenly, pulled the offer at 99s, pulled our offer at 00s. So again, not a very smartly thought out process. So we ultimately bought 89s. We covered and took profits off at lower prices. We then pulled our offers much higher up. There's just a lot of jumbled thought process going here. And it's so important that me as a trader, when I execute, I go back at the end of the day and say to myself, well, what created this, very confused execution? What was creating, this lack of clear thought process? Okay, because if I can execute ultimately with a very clear thought process, then in the long run, I'm going to become better and I'm going to perfect my style of execution. Okay, again, note, we've now allowed this market. It gave us the fours. It said you can take a 5-6 tick winner. It's now come all the way back to entry. So we've just said to the market, there we go, take the $300. And the stop gets triggered at 88. Okay, again, another mistake. Note, we had a stop in for 3 of the 5 contracts remaining. Why are we still holding on to 2 contracts? Okay, the trade's gone. The strategy's gone. The market's clearly not playing according to our strategy that we had. Why are we still in this trade? Another mistake that now ultimately has cost us more money. So note, had we stopped out where the other stop was at 88, okay, we would have saved ourselves 2 prices. Now, again, in the big scheme of things, $40, it's not going to break the bank. It's not going to, it's not going to make me a poorer trader at the end of the day. But what it will do, guys, is it will create bad habits. Okay, and that's why we root out bad habits as best as we can. Not because it's going to save me $40, but because what happens if one day I do that with a 50 lot or a 100 lot? Alright, you get the point. The math starts to add up. Now, that's the first reason why, we want to ultimately execute with good habits. The second reason is simple. What happens if I, was focused somewhere else or started to get a little bit upset and say, well, you should have given me my fill at 99s and started to run this trade further and further off sides? Okay, suddenly, by holding on to even a fraction of the original position, I've locked myself into a bias. I've lost objectivity. I've lost focus on ultimately what was the key reason why I entered. Okay? So what's the purpose? Why do I go through all of this with you? Well, it's simple. As you can see now, I've identified a whole bunch of errors with you. From obviously not getting my fill, at the 88s, to obviously, not taking the winner when it offered, not just cutting the trade when I had the chance. To then obviously not stopping out of everything as I should have done in a disciplined manner. So we've highlighted 3 key, things we could have avoided. Now, just to show you in terms of, what we could have done in a P&L sense, had we just had, or had we perfected our execution, okay? This is now regardless of whether the trade worked or not. What would the difference have been? So initially, we wanted $1,100, okay? We had a 10 lot in the market. We wanted 11 prices. That's $1,100. Okay. What we ultimately did was we took off, say, 2 or 3 lots for, sort of an 8-tick winner. So that's $240. All right. The market then said to us, you can have, with those remaining 5 lots, you could have another 6-tick winner. Okay. So that was a potential $300. More importantly then, we not only got stopped out on that $300, we actually took a 1-tick loss on that, and then we took another $40 hit as a result of not being disciplined. The net difference, well, it's $350 because we obviously took a 1-tick loss on the 5 lot, plus another 40, round it up and call it $400. Okay, so from wanting $1,100, we ultimately could have taken, even though the trade didn't do what it said, we could have ultimately taken roughly $600, $650, but in the end we made relatively little. Okay, call it $50 to $100. Can you see the difference, guys? Just a little bit of clearer thinking, a little bit of better execution. If we improved the execution there by say 50%, the difference in the P&L is massive. Okay? You times that, not just this trade strategy, you times that by say 5 trades over the course of the day where you're saving $200 on every trade just because you're executing a little bit better, that's suddenly $1,000. You times that by 5 days in a week, by 20 days in a month, by 240 days in a year, suddenly, just by perfecting your execution, by looking at key little errors you're making and ultimately determining how you can correct that, you can make a successful career. That is what perfect execution is about. It's not about getting the best price and getting out of the best price. It's about making damn sure that when you're executing, everything that is in your control, you control. Right? Note, at no point did I say I should have made 1,100. Okay? The market never traded my price. But what I could have controlled was the second bit, and that is the point of post-trade analysis. Okay, guys. So just to finish off, if you want want any information, axiafutures.com, emails info@axiafutures.com. Obviously you can email me directly if you have any questions. And then obviously do follow us on Twitter as well as our Instagram channel and obviously our YouTube channel. So if you like this video, there's going to be a lot more of these. So just subscribe. We will be sending out a video every single day, a new videos with price ladder action, just like you've seen. Videos with trade strategy analysis, videos of how to execute with a price ladder, how to execute with the market profile, all sorts of trade videos that can help you just get ahead in your career. Good luck, and we'll catch up again soon.